defending the free market and making the moral case for capitalism. The Justin Moore Show. Hey everybody, welcome to the Justin Moore Show, where we make sense of what's going on in this crazy, insane, out of control world. Yes, ladies and gentlemen, I am back. Justin Moore here, back in the saddle after months and months of absence. I do have to start off by saying I'm sorry, guys. I was not able to make it to the mic here. Just so much going on between, working with the airport stuff. I had to go to a few trainings, one in DC, one in Chicago, and then getting things going with farming, things falling behind. We've had crazy weather just like the rest of the country. And so, you know what? I don't want to just talk about all this stuff here. There's so much to get to here since we're just coming back after so long of not talking to one another. Well, I guess mostly me talking to you here. But I do want to focus on what the Federal Reserve has recently done, and I will get to later in this episode. Remember, fellow listeners, I mentioned that I was going to give you guys a referral code thing so you guys could, if you sign up for the Charles Schwab debit card, you will get $100 in your account, no strings attached. And I'm not getting anything for it, but I want to help you guys out. Loyal listeners, you guys are going to get some money coming your way. And I will also give you a credit card offer. It's a referral code also, where this is let me hurry and go to the link here. It's basically when you sign up for the card, if you spend $500 within the first 3 months, $500, that's nothing, right? You'll get $150. So I'm going to give you guys two ways so you can get some money coming your way, as I guess that's as a way of me being gone for so long. This is my little gift to you guys, all right? And for you guys sticking around after all this time. So let's jump right in. So here we are, back when we last talked. Let's go back even further. The start of this year, the Fed was talking about they're going to, they might hike interest rates a few more times. And at the time, remember guys, I was saying, okay, could the Federal Reserve raise interest rates? Sure, but it's just to play that game like they're acting like they have everything under control, trying to fake us into a good economy. I said more than likely they're not going to raise interest rates. They're probably going to, there's a better chance that they'll cut interest rates than raise them. So here we are, folks. The Federal Reserve has cut interest rates by 25 basis points or 0.25%. So the Fed, the highest they got interest rates was to 2.5%. So now they're in the range of 2.25% to 2.5%. So for some of you out there who do have, credit card debt, yeah, this is good for you. Your rate should come down, your APR, any sort of debt. But that's peanuts though. But what does this mean for the rest of the economy? Here, these guys and Trump's been trying to brag us into a really good economy. Things are looking great. But can the economy really be that great when here our economy can't take rates higher than 2.5%? 2.5%. That is nothing. Think about back in the 1970s, 1970s, we saw an inflation rate of 13%. We saw prime interest rates reach 20.5%. And here, our economy can't take 2.5% interest rate. That's too much. Well, really what Powell's been saying is that, let me click here, that, the Fed is really watching this like, yeah, the economy's strong, but we do possibly see some issues with trade tensions with China because Trump's kind of, playing his little games there. And, they're worrying about, export stuff has fallen. So they're kind of watching some things here. They're not worried about inflation at all. Inflation's just under their 2% goalpost. So they don't see any inflationary pressures. So they saw it as a good move. And so let's actually just jump right on in here with the Federal Reserve. And when they did cut interest rates here, the yield curve, which as you guys know, this is what, investors out there, what they watch. They're looking at this yield curve. When the yield curve inverts, that basically signals a recession. Or I guess to put it another way, every time our economy has dipped into a recession, the yield curve has inverted prior to that. And we saw as the Federal Reserve lowered interest rates. I hope I didn't mess up earlier here saying raise interest rates when they actually lowered them. I'm pretty sure I said lowered, but just in case I did, I mean the Federal Reserve has lowered interest rates. But when they did lower interest rates by 25 basis points, we saw the gap in yield between the 3-month treasuries and 10-month government bonds. We saw actually that slip below zero to negative 5.5 basis points. And then you saw, the yield gap between 2-year treasuries and 10-year treasuries, the gap was 10 basis points. So it really, really slimmed there. So investors are watching that. And also, guys, keep in mind, there's 2 people on the FOMC committee saying that we shouldn't have lowered interest rates because, look, we still have the economy, from what they're seeing, is still relatively strong. We still have an unemployment rate that's at 50-year lows at 3.7%. So they're watching this sort of thing. But what Jerome Powell is watching here is he's worried about the global implications of what's going on in the world. And he's trying to get ahead of the economy and making sure that it stays strong. And also, ladies and gentlemen, keep in mind, the Federal Reserve and the Federal Reserve Chairman, history has shown they work with the president. They want to get the president reelected. Jerome Powell, he wants to keep his job. With the election not till 2020, there's going to be a lot more easing to come. And actually looking at the market's already pricing in another 25 basis point cut for their September meeting, which I believe is September 18th and 19th. I believe that's what I saw. Let's see. Yeah. So, of course, immediately after the Federal Reserve lowers interest rates to the 2 to 2.25% range, Trump tweets, and he's not exactly happy about this because some people in the market were pricing in and they were thinking we'd see a 50 basis point cut. But Jerome Powell didn't do that. And the market had already priced in this quarter point cut. And, me and you guys know, and I'm sure a lot of you out there have invested in gold. And I was thinking about it, and I'm like, I bet you gold's going to sell off when it's announced that the Federal Reserve has cut interest rates by a quarter point. Because there are some people that were kind of a little bit hopeful that it would be half a percent. Because in terms of gold, lower interest rates and more easy money, that is a good signal for gold. And there's also seems to be some hinting at, it's going to be coming, more quantitative easing, QE4, which we have been waiting for years to happen. And I believe that is just around the corner prior to this 2020 election. And this is the first time the Federal Reserve has cut interest rates since 2008. 11 years ago was the last time the Federal Reserve has cut interest rates. And here they are. They're starting the trend all over again. Yes, this is very bullish for gold. Anyway, here's Donald Trump on Twitter. What the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate-cutting cycle, which would keep pace with China, the European Union, and other countries around the world. As usual, Powell let us down, but at least he is ending quantitative tightening, which shouldn't have started in the first place. No inflation. We are winning anyway, but I'm certainly not getting much help from the Federal Reserve. Man, every time Trump talks about Jerome Powell and whatever tweets, he always seems to be talking about winning and losing, this and sort of thing. But he's always winning. So there's Trump. He's not happy. He's pressuring the Fed to lower interest rates further. And this is why just on Thursday, August 2nd, or actually that was August 1st, sorry about that, where is this? I know I got this somewhere. And after Trump said this on August 1st, this sent stocks down to the red because this is what he said. Beginning on September 1st, Trump plans to impose 10% tariffs on an additional $300 billion in Chinese imports that he hasn't already taxed. So what Trump is doing with this, and this is what Trump has been doing with tariffs all along, is he's using it as a tool, as a negotiating tool. That's what he's been doing with the Chinese. So he continues to use it as that. And he's also using it to pressure the Fed to further lowering interest rates. Because that's part of the reason, and that is some of the reasoning that Jerome Powell gave, is that he was uncertain with the trade talks between the US and China, and so he lowered interest rates. And also, what's a little funny here is that Trump wants lower interest rates because he wants the dollar to get a little bit weaker, because that helps us in terms of getting our exports out. And what has happened? The dollar right now is at 2-year highs. The dollar is actually kind of strengthened. It's at around the dollar index, it's over 98. And that's what's interesting too, is here we have gold. Actually, gold on August 2nd, it shot up over $30. Right now it's at, well, it was up higher in the day. I think it was around 1455. Now it's around 1441. So it's pulled back a little bit. But gold, with as strong as the dollar is, and gold is showing this much strength, ladies and gentlemen, what I've been talking about for years on this show, protect yourself. Buying gold and silver is the cheapest insurance you can get. And that is proven to be true. Look at this. You can buy something that is a safe haven asset, and it's also dirt cheap. It is still dirt cheap. Some of my miners I'm invested in right now, I'm up 120%, 80%. I'm making some good money on this stuff. The stock I invested. And on the bonus episodes I have released, to those of you who have donated to my show, you guys are up money. If you bought that stock, I recommend it. So getting back to Trump, this is what he's doing with the tariff talk. He's using it as a tool basically to twist Jerome Powell's arm at the Fed. He wants them to keep lowering interest rates. And yeah, it's already priced in that at their September meeting, they'll cut interest rates again, another 25 basis points. That'll take us to the 1.75 to 2% level for interest rates. And, the Fed has already halted that quantitative tightening where they were shrinking the balance sheet that they have at the Federal Reserve. So all this is very bullish for gold. Oh, and on top of that, worldwide government debt, government bonds. There are $13 trillion worth of these government bonds that are producing a negative yield. Folks, this is the perfect environment for a soaring gold price. If you haven't bought and invested in gold and silver yet, even if you don't see gold as money like I do, but if you're listeners of this show, I'm sure you think of gold as money. But if you don't, for some reason, it's the cheapest insurance you could get. Just get a little bit. And just buying the metal, that's a great way to hop on, and you'll make good money just buying the physical metal. But if you want to make more, buy into the miners, buy into the royalty companies. But obviously, not all gold stocks are created equal. There are bad ones. There are ones that you shouldn't get on. But even at the start of a gold bull market, even the bad stocks do well. But I'm not saying that you're guaranteed to make money. I'm not saying that. You got to judge accordingly. But I do put a lot of faith in that stock that I have recommended on my bonus episode for anyone who has donated over $50 to my show. So here, look, I'm helping you. And actually, with the debit card, I will be giving you guys the referral code too, and also that credit card. Actually, the credit card, it's a link. So I will set that up. I will put that in the show notes for this episode here. If you just click on it on my website, you just highlight that, put the bar in, and you'll be able to get that offer that way. So you get the $150 via that way. So I'm helping you guys get some money. You give me some money back, I will help you make more money. How does that sound? Isn't that a great relationship? That is capitalism, my friends. So here we are, folks. We are in the perfect environment for a soaring gold price. Low interest rates. The Fed wants to keep easing more and more. Negative interest rates worldwide. Look at a 50-year government bond in Switzerland has a negative yield. This is crazy. This would not happen in a free market. Only with government fiat, government currency, can this happen. And it's a famous quote by, I don't even remember who that was, saying that I think it actually was Milton Friedman, where only the government can put ink on a piece of paper and make it worthless. And talk about the truth in that. Folks, this is what's happening Right now with the US dollar, yeah, we've been seen as the cleanest of the dirty laundry out there in terms of the values of currencies. That's why the dollar has stayed strong. People have fled other currencies because, Germany, their central bank, they've been easing all along. Japan, China, all over the world, these guys have very easy money and negative interest rates. And if you don't think negative interest rates are coming here, I think you're fooling yourself. We are going to see negative interest rates here in the United States. We're sure as hell going to see QE4. That means more money printing. We'll see interest rates go back to zero. And at that point in time, gold is going to surpass its highs that we saw 10 years ago. Well, less than 10 years ago, where gold almost broke 2,000 an ounce. When gold gets that high again, these gold and silver stocks, you will make 5, 10, 20 times your money. That is what's coming our way, folks. Unless you're happy with making your 1% in the bank, that's going to get inflated away anyway. This is what I'm talking about. This is insurance. You're not only going to be protecting yourself from what's to come, but it's a way of you could make some good money. And so with Powell in this latest FOMC statement, he did make the comment that we're seeing that it's appropriate to adjust policy to a somewhat more accommodative stance over time. And that's how we're looking at it. So that's a quote directly from Powell. And so there are some people, and that's the reason why gold sold off too, is that they were hoping that Powell would be a little more giddy about lowering interest rates. But he's talking about, he sounds reasonable, which people don't, they want more than that. They want him, as a lot more of a Ben Bernanke. But he is starting to make that transition. And folks, remember, I said this before Jerome Powell was sworn in as the new Federal Reserve Chairman to replace Janet Yellen. I said that Jerome Powell will start his time at the Fed. He will start as a Janet Yellen, and then he's going to morph into a Bernanke 2.0. He is starting to make that transition. He has started that by lowering interest rates back at that July meeting in 2019. That was his first step to his little Bernanke transition. And he's only going to get a lot more easy, especially when we still have another year to go before the 2020 presidential election. And Jerome Powell is definitely going to be a lot more accommodative to help Donald Trump get reelected. And Donald Trump, he needs a strong economy if he wants to get elected. You're seeing these Democrat debates. They certainly don't seem like they have any strong candidates that can take Trump on. But if you have a weak economy, Trump might lose his reelection that way. So this is huge. And Trump, you guys see, look at the pressure he puts on the Federal Reserve. He's no, mealy-mouthed Republican like a lot of these other Republican presidents we've had. Trump is a lot more aggressive. Look at the total crap he gives people of his own party, and he doesn't take crap from the media. This guy is something we haven't seen, especially my generation. There's been no one like this guy. So, folks, it is going to be a wild ride. And actually, before I forget here, ladies and gentlemen, I'm going to give you that promo code so you can get this debit card here. Where the heck is it here? Let's see. Okay, so it's the Charles Schwab debit card. Now, I've talked to you guys about this one before. This debit card is fantastic. It's the one I use when I'm traveling abroad. Internationally, do not go and exchange your money at the airport. You get ripped off. The fees, the exchange rate, absolutely horrible. Or if I say it like Trump, absolutely horrible. No. If you have a debit card, you can go and just, if you find an ATM in another country, you're getting the best bang for your buck. And with this Charles Schwab card, they don't charge the ATM fees. Well, they do, but you get reimbursed the fee that was charged. So you're not paying anything in terms of an ATM fee. So that is freaking awesome. So if you're going to do some traveling abroad, even if you don't, you need some cash, you need to stop at an ATM, you don't have to worry about any ATM fees ever. This is the best card for that. So when I give you, and if you use this code when you're filling out this Charles Schwab debit card, this is the one you need to put in that field, like the referral code thing, so you can get that $100. Now, I think one of the strings they do kind of attach to it is that you need to at least put $1,000 into this debit card. So make sure you have $1,000 saved up before you do this, and you need to leave it there. If you just want to play it on the safe side, just keep it there a year. So I mean, if it's money that you have in the bank anyway, just think of this as Charles Schwab is just going to be your online bank. So if you think about it that way, it's not like you're somehow losing. I mean, it's also a high yield checking account. So you're actually going to be earning a lot more interest with the money you have sitting in there, that $1,000, than you do probably at your bank. I know I'm making more than I make at my local bank. So here's the referral code you need to put in. It's REFER. So refer 6FCQCAF3. So by using that referral code, when you sign up for this card, you will receive, I did this myself, my friends, and I got the $100. So it's an awesome way to get a free $100 just by putting some money in another bank account is what you're doing. And when you're signing up for this, you might get kind of confused, like, wait, it looks like I'm signing up for a brokerage account, which the Charles Schwab, it is a brokerage dealer. And especially if you want to buy gold and silver stocks, you need to set one up anyway. So you might as well do it through Charles Schwab. So if you set it up, and you are setting up a brokerage account also, but you never need to use the brokerage account. Just make sure once you put the money in there, make sure you have it transferred over to a separate savings account, which you need to have opened up. This is all free, doesn't cost you anything, and it makes it easy if you need to deposit more money in the future, if you actually want to start buying some gold and silver stocks. And if you want to make some pretty easy money at this point in time with gold and silver stocks still super cheap and virtually, I'm not going to say risk-free, but significantly a lot lower risk than you have buying anything else in the market. This market is toppy right now. Look at how high the stock market is. There is no way in hell I'm going to put my money in, the general stock market. Gold and silver is a much safer bet from the way I see it. And I'm sure if you guys understand Austrian economics like I do, you see it that as well. Just think of it again. It's insurance. It's the cheapest insurance you can buy today. And I'll have to come out with another bonus episode in the future for people who donate to my show. And I will give you guys some great stock recommendations so you guys can benefit from this. And the $50 you've donated to me, I will make you multiples and multiples of that in the future. And now the other one is going to be a referral link, as I told you guys earlier. And this is for a Capital One credit card. You have to have excellent credit, though. That is the one string with this one to get approved for it. But if you're not sure if you have excellent credit or all that sort of stuff, just try it. Try to apply for it. And if you do get it, I think it's about 18 months, 0% APR. So if you were kind of in a tight spot in terms of money, it's basically a great way to have an 18-month free loan, essentially. Just make sure you pay it off at the end of the 18 months. And then also you get $150 back after you spend $500 on the credit card in the first 3 months. And if some of you out there are deathly afraid of credit cards, don't be. As long as you pay your statement off in full every single month, you will never be charged any interest. Never. The credit cards I use, I make money on my credit cards. So with credit cards, if you're responsible and you're not late and you don't make minimum payments, but you pay them in full, you will never have to pay interest and you will earn money with them. And if you sign up for this Capital One credit card, you will, after spending $500, which $500 is nothing, maybe put your internet bill, use this credit card to pay it. And maybe you'll rack up $500 just right there, or going out to eat a few times. Actually, if some of you can't, for some reason, find this referral link for this credit card, I'll just give it to you guys right here. So you have it. Just write this down, get a pen and a piece of paper. https://capital.1/2WT2Q2J. And when I was giving you guys that at the end there, those twos, that's the number 2. Okay? So yeah, if you just put that in your web browser, that will take you to the form you fill out to see if you get approved for the credit card. And that, again, it's going to be $150 coming your way. And actually, if you're afraid that, oh my gosh, me signing up for this credit card, it's going to hurt my credit. Actually, if you only have one credit card, by signing up for 2 or even 3, it actually will improve your credit score. Just because it's based on your total credit available, that sort of thing, which you can talk about that a different day. So I wanted to make sure I gave you guys those links because I didn't want to forget. And I know it's been several months since the last time we talked. So yeah, things have just been crazy busy here. I'm going to try to hopefully stay on top of things because there's so much going on right now, especially with what gold has been doing. And think about this, ladies and gentlemen, with gold. Gold started the year at $1,279 an ounce. Right now, gold is at $1,440. Gold is up 11% this year. So even if you just bought the coin, you'd be up 11% this year. I mean, that's a great return on investment right there, 11%. But then think of gold up 11%. The average gold stock is up a multiple of that. I mean, it's crazy. I'm watching these stocks that I'm in, how fast they have moved up. But there's some that it's like, if you want to compare to where gold is at now to the last time gold was up this high, these stocks were still a double and triple from where they're at right now. So they're still dirt cheap. And there's still some safe gold stocks and silver stocks you can get into where, yes, you will make some very good money. But don't bet the farm and throw all your money into it. Be smart about it. Money you don't need. Money you can set off to the side. You don't need to touch for 5 years, which it looks like the rate this is going, next few years, the returns are going to be insane. And I'll try to keep you guys up to date on that. I'm trying to think if there's anything else I really want to touch on this episode. Just with the Federal Reserve lowering interest rates for the first time in 11 years. Now think about this too. The Fed started raising interest rates in 2015. They raised rates 9 times. 9 times. That was under Yellen, and then Jerome Powell, he raised them for a little bit. And now he's made his great reversal. And so now interest rates are starting to trend down. Money is starting to get easier and easier. They fear the collapse coming our way. In our economy, we cannot take high interest rates. With our national debt, if interest rates go to average levels, which I've talked about on the show, I'll have to get you guys updated numbers, where you'll be spending over $1 trillion a year just on interest on the debt. What used to be these large stimulus bills we used to freak out about. Oh my gosh, we can't afford that $800 billion stimulus package that Obama first passed. That's now interest on the debt if we go back up to normal interest rates. Our economy can't afford that, ladies and gentlemen. This is how scary the situation we are in. Gold and silver is such a no-brainer. It's unbelievable to me that gold and silver have still remained to be this cheap. Silver is really where the money's going to be made here in the short term. How much silver really hasn't moved up that much. Now, recently it has. It's caught up a little bit to gold, but still, silver is just over $16 an ounce. 16. Back in 2011, silver peaked out at almost $50 an ounce. You'll make several times your money just for silver to get back to where it used to be. Just the metal itself. And I've always told people too, don't go buying the gold and silver miners until you actually own some physical gold or physical silver, or both. Because you need to protect yourself in that way. If somehow you can't get access to your money in your bank accounts, which isn't that far-fetched, has happened. Look at over in Cyprus, where they limited people, the amount of money they could withdraw from their own bank accounts. That's scary. You can't access your own money. We're in a digital world. But having some actual, currency, having some actual money in your hands if you need to barter, the world will always accept gold and silver as money. The world always has. So ladies and gentlemen, I don't want to get, it's just with this episode, because I haven't been back in such a long time, we're kind of jumping around all over the place because there's so much that's been going on. So I'm going to try to do a little bit more of a focused episode next week. There's so much to talk about. Who knows where gold and silver will be at then? Maybe it'll pull back. There's no guarantees. I mean, things don't go straight up unless you're at the end of a bubble popping. Look at Bitcoin. Go back on my episodes, listen to what I said about Bitcoin as Bitcoin was climbing $3,000 in 1 week. That is how crazy that moved. But after I said that, and talking about the craziness going on, and I talked about the tulip mania. After I talked about that episode, I think Bitcoin peaked just about $20,000 a coin like a week later. Then it came crashing down. I'm pretty sure that's what the timing is. I'll have to go back and look. Anyway, ladies and gentlemen, I will talk with all you guys here in a few weeks, and I'm looking forward to it. This is Justin Moore, signing off.